Okay, we have an all-star panel, and there is no way to do this properly without doing it alphabetically. So I can't decide who I should ask first questions, so I decided to do it alphabetically by last name, if that's okay. So why don't I start with Bill Ackman. Bill is the CEO of Pershing Square, and you've been very active on social media of late, I think it's fair to say. So does that help your business or hurt your business, and what's been the impact of being so active on social media?
I think it's very helpful. One, my principal driver in life has been independence. That's motivated me to be successful, and free speech has been a very important thing to me. So it's sort of aspirational for me to be able to speak so strongly about things I believe in. And then second, I think the things that I've talked about, my advocacy has been about everything from viewpoint diversity, against discrimination, against terrorism, in favor of capitalism. And, I think people who I partner with share those values, and if they don't, I probably would rather not partner with them.
All right, you've been particularly active recently in decrying the possibility that a particular candidate might be elected mayor of New York. Why do you care so much about that, and will New York fall apart if this candidate is elected?
New York's been very good to me and my family. Been New York City residents for over 100 years. And it's the most important financial capital in the world. And I think there are having a socialist mayor, I think, would be catastrophic for New York. While he's correct, as we saw from the survey, affordability is the number one issue, actually, for many people in New York City. He's correct on the issue, but he's incorrect on the solution.
All right, so who's going to win the mayor election?
I actually think we have a shot of Cuomo winning the election, but we have to have everyone on this panel tell everyone who works for them to show up on election day or before. It's a critically important election for New York.
Okay, Cristiano Amon, you are the CEO of Qualcomm. Qualcomm did a spectacular job in the mobile telephony world and with its proprietary patents in terms of things that needed to be in cell phones. What are you doing to take advantage of the next wave in terms of artificial intelligence? And how are you repositioning Qualcomm to be a leader in artificial intelligence?
Yes, look, Qualcomm has been changing a lot, I think, for the past few years. I think what we realize is some of the technologies we have developed for the mobile industry, and given the scale of the mobile industry, they could be incredibly disruptive for other industries. And when you look at what's happened with AI, it's a new form of computing, it's a new form of software. This is going to change every single computer that we have. And that's not only what's happening on the data center, but also what's happening on phones, on personal computers, on cars, on industrial machines. We think that's an incredible disruptive technology that will change. It's going to be a big change for consumers. It's going to be a big change for some of the enterprise. I don't know yet how best to compare. I remember when I started my career, we have to go in and get memos from the fax machine and start writing new memos back. And then if you look at the combination of computing and internet, what has done for consumers and for the enterprise, I think that is the kind of change. And I think it's going to create an incredible opportunity of transformation in all of those industries.
So if somebody wanted to invest in what's going on in artificial intelligence, what kind of a company would you have them invest in other than Qualcomm?
Look, I think right now, I feel that if I go back to what happened in the beginning of the internet, nobody really knew which company won the search, the social media, the map, what happened, for example, with all the different services, the SaaS business. I think we're a little bit about that in this stage in AI. We don't know yet who is going to be the winners, but I think this space is moving very fast. I will pay attention to the companies that are becoming really connected to the consumers. I think understanding human intentions is very important and valuable when now the computers understand what we see, what we say, what we write is a change in the human-computer interface. And companies that are embracing, I think, the new agentic type experiences for the enterprise. And I see a lot of companies make bold moves. I'm actually very proud of our partnership here in Saudi Arabia. I think the national AI company Humane is doing a lot in agent for enterprises. I think it shows the direction. And I think we have a bright future, and all of this is going to be happening within the next 12 to 24 months.
All right, Jamie Dimon is the CEO of JP Morgan. Jamie, recently you opened a new building in New York City that cost a fair bit of money. What was the reason to build your own building? Why not just rent buildings from other people?
Yeah. So first of all, I'm thrilled to be here, everybody. Thank you for having us. Congratulations on the enormous path to peace in the Middle East, which I think is the most important thing. You got to thank the Crown Prince and the President of the United States. And that dwarfs all other things, by the way. The building is not nearly as important. We have to compete with you and Bill Ackman and Goldman Sachs. And it's a beautiful building. You know, we're giving our people beautiful trading floors and 15 places to eat. You know, a great entertainment space. We try to treat our people well. I used to make a joke that these people want Pilates, yoga, and wellness, and now we're giving them Pilates, yoga, and wellness. So it's a great place to work. Our people work very hard, and wherever we are, we want them to feel good coming to work. And I also think in-person collaboration is so important for society, for life, for creativity, for cohesion. That we are back to work full time and.
You've been a leader in saying that people should come back to work and work in offices. What is your thinking about why it's important to actually be in the office as opposed to doing it over Zoom?
Yeah, because Zoom is a great tool, so I'm not making fun of Zoom, but younger people being left behind, their social lives are deteriorating. They don't get ahead. But even all of us in management, when we meet on Hollywood squares, there's not as honest a conversation. You don't have that constant follow-up. People say, we'll pick it up next week when we get there. Steve Jobs used to talk about the collaboration that's accidental because you run into someone in a hall and they come with an idea. And almost everyone probably in this room, if you look back at your careers, you learned a little bit from apprentice system. You were with other people who took you on a sales call or told you how to handle a mistake or something like that. It doesn't happen when you're in a basement on Zoom. Right. And you don't get married on a basement in Zoom, and you don't meet people. So I think it's just very important to have a social life.
Okay. If the President of the United States asked you what the qualities should be in the next Fed chairman, what would you tell the President of the United States?
We'll deal with whatever the reality is, okay?
Okay.
Yeah.
All right, and you're not interested?
No.
All right.
Me, absolutely dead. Are you kidding me? Over my dead body.
All right. George Elhedery, who is the CEO of HSBC. So HSBC is a major bank in Europe, obviously, and in Asia as well. How have the European banks fared compared to the American banks since the Great Recession? Have they kind of slipped behind the American banks in terms of global leadership, or are they still very competitive?
Thank you, David, and very privileged to be here with everyone. First, we do have deep roots in large parts of the planet, certainly in Asia, certainly here in the Middle East. We have been born 160 years ago in Hong Kong, and about 10 years later, we were already established in San Francisco, and that's the kind of history we built around these areas, and we've been uninterrupted more than 70 years in the kingdom. It's very important to realize that now you build connectivity through trust, through relationships, through historic understanding of local needs and local cultures. And this is really what we try to position ourselves for. Notwithstanding, we have great partners and great competitors in my American peers here on the stage. And we will supplement each other to make sure that the world is fully served with financial services.
And how is your relations now with the government of China? You do a lot of business in China and Hong Kong. How is that? Is that more difficult than it used to be or easier than it used to be? Or both?
David, I want to say it's probably always been difficult to navigate some of the, national requirements, and more and more assets are becoming national assets. Code is becoming a national asset. Chips are becoming national assets. Cloud and data are becoming national assets. But if you understand what is national assets for many of these jurisdictions, there is an ocean of opportunity out there where connectivity and supply chains and consumers and trade flows can still happen and want to happen, and this is where we need to focus our attention.
Larry Fink is the founder and CEO of BlackRock, the world's largest money manager, I think it's fair to say. Larry, you see where money is flowing in and out of the world, probably more than anybody else. Where is it flowing in right now, and where is it flowing out?
Well, it's good to be here in the kingdom. Thank you, David. It's always wonderful to see the transformation of the kingdom. And again, coming back here again, we're seeing an enormous change. We just did a transaction here in the kingdom, and we had 5x more demand than we could provide. It was for a pipeline in Jafurah. And the amount of money that was interested in investing here in the kingdom was at a record level from places all throughout the world. We had 5 times more demand for investing in this one project. To me, this is just an indication of the transformation here in the kingdom, but more importantly, in the whole region. And I do believe we're seeing more and more as the GCC becoming one of the major destinations for capital. This region has been typically underinvested by global investors worldwide. At the beginning of the year, we did see some modest transformation movement out of the dollar, and we saw that money moving into Europe and to other places. But that movement was from a huge overweight in dollar-based assets. And I would say in the last 2 months, we're seeing that money coming back into the United States. And so I don't see there's that much movement. There's still a deep belief in the opportunity in the U.S. You asked Cristiano about AI. If you look at the makeup of the second quarter of the U.S. economy, over 40% of the economic growth in the second quarter was CapEx for technology. And you don't see that in other places in the world. And it's that CapEx, whether it is through data centers or finding more power, gas, building gas turbines, you're seeing all that happening more in the United States than most places in the world today. You're not seeing that as much in Europe. And this is one of the big reasons for the huge gap between the U.S. GDP and the European GDP. But look, money's going to move around all the time, but I would say most global investors have a very large overweight in the U.S., and I think that's going to be the place to have your overweighting for at least the next 18 months. And we'll see how that all plays out then.
You talk to central bankers regularly. What are the biggest concerns today of central bankers about what's going on in the global economy?
I would say the biggest question from central banks is what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have, what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
Okay. Patrice Motsepe is the founder and executive chair of African Rainbow Minerals, also the president of Africa Football. So, Patrice, why is gold more than doubling in price? And in the last year or so, gold is over $4,000 an ounce. Is it a good buy now, or is it now overvalued?
Well, let me start by thanking Yasser and Richard for doing an excellent job bringing the world together. Saudi is a reliable and a trustworthy partner, and thanks for the great work. We've got about 50,000 employees in our gold mines, and we've got investments in Australia and Papua New Guinea. Gold has always been a reliable source of wealth. We love the dollar, we love the euro, but During difficult times, the world, as has recently been reflected by the central banks, they fall back, and gold plays an important part. But as an entrepreneur, we have to diversify. So we're in 38 countries in Africa, and we invest in India, in Europe, in America. But for us, Africa is the most exciting place to be. Are there challenges in Africa? Yes. Will there be challenges? But it's an incredible place for us to invest and get competitive returns.
So about 1% of private equity dollars invested around the world are invested in Africa. Should it be a higher percentage, and why aren't people investing more in private equity dollars in Africa?
Over the last 20 to 30 years, we've tended to look at investments worldwide, and we underestimated the huge amount of capital in Africa. Our businesses, family businesses, we've invested billions of dollars on the continent. We can invest in other parts of the world, but the challenge for Africa will continue to be, it has to be a globally competitive destination for investment. Investors, whether in London, New York, or any other part of the world, invest in the most competitive countries where investment is welcome, safe, competitive, and the returns are good. So I'm confident, I'm excited about the future of Africa, and we will continue investing in the continent.
Okay, Scott Nuttall is the co-CEO of KKR. Scott, people say that it's difficult to raise private equity dollars these days. Is that the case? And why do you think has been difficult? If it has been difficult, or it's not difficult, why do you think people think that it's difficult?
Well, I think people believe it's difficult because we're in a particular moment in the cycle. Now, let's separate. There's private equity, sometimes as a term is used broadly. So infrastructure, private credit, and real estate, not really feeling the impacts of what we're seeing in the PE cycle today. I think what's been happening over the course of the last 30 years, you've had a bit of cyclicality to fundraising. And so lessons have been learned in different points in the cycle. And so what's happening right now is you probably had parts of the industry that probably over-deployed in years like 2021 and maybe under-deployed in years like 2020. And so there's a bit of a dynamic right now where perhaps some assets were purchased for valuations a bit too high, and it's going to take a little bit longer to work out of that. So what you're reading about is monetizations are taking longer to come back to investors, which is impacting how some of them are deploying capital because they need that capital to come back. But I think you're seeing more dispersion right now. We had 10 years where everybody looked reasonably bright because rates were low, inflation was low, and multiples were expanding. Now we're going to see who's good at investing through a cycle.
All right, let's suppose I really don't know where to put my money, but I think KKR has a good brand. Where should I put my money in terms of private investments these days? What's a very attractive area over the next 5 years to invest if somebody wanted to invest with you?
Well, I think we look where are there capital supply-demand imbalances. And happily, that's taking place in a number of different parts of capital markets around the world. Infrastructure, clearly significant need. Governments, if you look at developed economies around the world, debt to GDP went up by 10 percentage points on average since COVID. Okay. So more governments are looking to work with us on their balance sheet. I'm sure that's true for a number of people on the panel. That creates opportunities. There's not enough capital to be able to feed that. But we're also seeing opportunities to invest in different parts of the world across the private credit, across private equity, and real estate, the bottom's behind it, and is coming back.
Okay, Lubna is the chair of Oleon Holdings, among other things. Lubna, how has it changed in Saudi Arabia to do business here compared to 20 and 30 years ago?
Well, the change, first of all, thank you for chairing this and being the only Saudi on this roundtable. I have to say I'm very proud of the change that has happened in the country. I think what we see around this table is an indication of how attractive the market has become in Saudi Arabia. Earlier, we heard that 24 billion 24% has been the growth of investment into the country. 34 billion has been invested from foreigners in the country. But it's all because of the tremendous change that has taken place. Ease of doing business, visas are easier to get. Lifestyle has improved tremendously. But one of our biggest changes has been the new investment law, which took effect this year. And this investment law gives foreign owners and Saudi owners equal footing in the countries. So in terms of access of capital, owning real estate, disposing of their investment, and repatriating the money. That's a tremendous change.
Okay. So let's suppose I wanted to invest in Saudi Arabia, and I didn't know that much about Saudi Arabia. What areas of Saudi Arabia would you recommend that I, as an investor, put my money in now?
Well, the country is booming. Real estate, selectively, is a very good area to invest in. Technology, we are in demand of great technology. So, I should go back to real estate. What I heard is data centers, and I think you are investing in data centers in the country, as well as healthcare. There's a great demand for quality healthcare, pharmaceuticals, and I have to say in renewable energy, as there is a great demand for increasing our output from renewable energy.
And is it easier being a woman investing in Saudi Arabia than it was 10, 20, or 30 years ago?
I've been doing business in Saudi Arabia for more than 40 years. It is more visible now, but I think it has been the same all along. There has been no discrimination between women and men from the beginning, I would have to say.
All right. Steve is the founder and CEO of Blackstone. Steve, you know Xi Jinping pretty well, and you know President Trump pretty well. What's going to happen when they get together? Are they going to come up with some solution that's going to improve the relations between China and the United States?
Well, David, thanks for asking that low-profile question. It's fun to be in the presence of a Major League Baseball owner asking those questions. I would say, without much hesitation, it's going to be a very positive outcome between the two countries. I think you've seen some preliminary views by the government of both countries that they've reached some kind of balanced relationship on the trade issues that have really been very visible and high profile and moved markets. I think that they've gone a long way to develop a much more functional relationship, which is good for the world. And I've been involved in some of those discussions. Both presidents want to sort of lower the temperature significantly in that area, and I think they're going to find their way to doing that.
Okay. So you invest all over the world and in many different categories. If somebody said to you, here's some money I have, I don't really know what to do with it, but I want you to take care of it, invest it, get me a reasonable rate of return, what area would you recommend that somebody invest with you? In what area? In what country or what kind of sector to get a good return?
Well, people do ask us that question. Right now, the most interesting area is in the data center, AI complex, with particular emphasis on power. Power is what's going to be in short supply. If you look at a developed country like the United States, we're somewhere between probably 80%, 85% of all the investments are going, we have an electric grid that didn't grow for basically 20 years. And now with the advent of all these data centers, you're going to have growth of at least 4%, maybe 5% going forward.
The reserve to protect adequacy of electricity in the United States is sort of mandated around 15%. So if you're growing at 4% a year and you only have 15% surplus, something not so good is going to happen very quickly. And that's already happening in a variety of areas in the United States. So the need to solve this problem is really acute. And for those of us who've been involved in this, at Blackstone, we're the largest developer of data centers in the world, largest owner of data centers. So we can see this all coming. And there just simply isn't enough money for the scale of this problem without very high returns going along with it.
Okay, so David Solomon. David is the CEO of Goldman Sachs. David, the IPO market and the M&A market seem to be coming back. What kept it from coming back for a while? And do you think it's going to come back as well in Europe as well as in the United States?
Well, first of all, thank you. I'm delighted to be here. I want to echo the thanks to His Excellency Yasser and Richard for the opportunity to be here again. There's no question M&A and IPO activity have been accelerating. I think they'll continue to accelerate in this environment. I think there are different reasons why there were headwinds over the course of the last handful of years with respect to both. With respect to M&A, confidence and also the regulatory environment weighs. And so I think with respect to M&A, no matter where you were operating in the world, if you wanted to do large, interesting, strategic things, one of the first questions was, can we? And no matter what the question was, the answer was generally no. We're now in an environment where the question is, can we? And the answer is generally maybe to potentially yes. And so that's leading CEOs to be much more strategically focused. I think scale continues to matter enormously. And so if you have an opportunity to create scale and relative position, and right now people feel that there's a regulatory environment that will permit it, we're seeing an incredible pickup in activity, and I think that'll carry through in 26 and into 27, unless there's something that slows that down. With respect to the IPO market and also financial sponsor activity, and Scott, alluded to this, 2020 and 2021 led to significant markups in private investments, and then 2022 led to a different valuation equation, and it's just taken time for us to grow into that. We've now come close to growing into that, and that's leading to an acceleration. I think the IPO market is wide open for companies that want to bring, good businesses priced appropriately, and I think you're going to see that continue to accelerate, although in the U.S., with the government closed, there are no IPOs, so until we get the government opened, it's hard to see that. The pace of this activity in Europe, for example, is slower. And it's slower because of the regulatory burdens. It's slower because of some of the headwinds. 60 to 70% of all M&A activity, the target or the acquirer are US-based. And while IPO activity is definitely accelerating around the world, the US has deeply embedded advantages where more of the activity will be US-based.
Do you have any worry about a potential recession in the United States? Do you see any evidence of that anytime soon?
I mean, I always worry about, what can happen and what will happen. At the moment, I don't see a lot of compelling evidence for an economic slowdown in the near term. But the thing about economic slowdowns that I think is important for us to all remember is there's always a distribution where that's possible. Confidence can change very quickly. Exogenous events can change that confidence. At the moment, that doesn't seem obvious in the next 6 to 12 months. But I assure you, when we do get a slowdown or we get a change, it's going to be something that we don't see coming, when it actually shows up.
Okay. Lip Bhutan is the CEO of Intel. The President of the United States said that you should step down as the CEO because he said you had investments in China and didn't think that was appropriate for Intel CEO. Then you met with the President at the White House and you came away selling him 10% of your company. Whose idea was that, and was that an easy sell in the White House Oval Office?
First of all, thank you so much an honor to be on this panel. And so clearly, being a good engineer, I tried to address the issue. So I set up an appointment to see him, and so have a chance for me to explain. I'm born in Singapore and educated in Singapore, and then go to MIT and then study. And then 20, 30 years ago, everybody invests in China, so I did. But it's important to address the appearance of conflict. So I've been giving my carry interest to the charitable trust, and then so in a way address that. And then during the discussion, and I told him the first term I turned around Cadence Design, make almost 100 times return to the shareholder. And I said, second term, I like to make Intel great. And he said, how great can that be? And I told him the plan that I have to do it. And he said that we got to be a shareholders. And so I welcome him to be the shareholder. He said, next Friday, I want to announce I want to own 10%. And so he's delighted to have them as a shareholder. And it's an essential partner for us.
Is it easy having the United States government own 10% of your company, or is it hard?
No, I think it's good to have. And then if you look at TSMC, Charter Semiconductor, the government is a shareholder in their respective country. And it's an infrastructure. And it's very important for this whole resilience of the supply chain. And I think it's critical. And that's why I came back to turn around this company.
Intel used to be the leading United States semiconductor manufacturer and designer. It lost its way a bit. What do you think went wrong with Intel, and how are you trying to fix it?
Yeah, I think it's a tremendous success 20, 30 years ago. But I think complacement came into the picture, and then starting to have too many layers of management. So I decided to come in and clean up and then refocus the company to be an engineering-focused company. And tremendous opportunity in front of us. One is the AI, machine learning activity in terms of agentic AI and physical AI. And I think Intel can play a tremendous role in that. And then the other part is a foundry. And I think the world needs a reliable semiconductor foundry in U.S., and we have a footprint globally.
Okay.
Yes.
We're just about out of time, so I can just ask any of you comment on this question. The United States government has roughly, I guess now, about $38 trillion of debt, and we're adding about $2 trillion every year. Does that bother any of you that we have this much debt, or you think it's manageable because we've been managing it for the last 10 years or so? Anybody worried about the debt? You are?
Actually, I think we keep looking at the liability side of the balance sheet, and I think we also have to focus on the asset side of the balance sheet. And I think what the president is trying to do is massively increase the asset side of the balance sheet, including, among other things, I think is the investment in Intel is up 2x, 2.5x since the president made the investment. Look, I think it's very difficult to outrun $37 trillion of liabilities when the demands, it's very easy for a government elected for a relatively short period of time to make commitments. I do think the way we're going to get there is by growing the asset side of the balance sheet. And if you think about the government owns 21% of every corporation in America, and it can adjust the tax rate anytime it wants. It owns 35% of every American's income, and it can make an adjustment in that number anytime. So there are a lot of assets on the balance sheet of the U.S. government that don't appear that are significant. So I'm not worried about our solvency, although I would like to see a slower growth rate in our liabilities.
Yes, Larry?
So if we continue to grow at 2% a year, the deficits to a percent of GDP is going to overwhelm us. But if we could unlock private capital, unlock everybody in the room, we could grow at 3%. I mean, it's not much change, but if we grow at 3%, debt to GDP will fall. But that being said, we still are a nation that needs 30 to 35% of all of our treasury sales goes overseas. And to me, that is the biggest issue today. We're lucky that people would like to invest in U.S. dollars, invest in the U.S. economy. If that ever changed, it has a multiplier effect because the dependency on selling dollar-based assets to foreigners. We are one of the most unusual nations in doing that and having that type of dependency. In most other countries that have high debt to GDP, they have huge domestic savings. So it does not have that difficulty. So it's something that we just need to be aware of, but we could get out of this very easy as what Bill said. We need to grow out of it. We need to unlock private capital. It is not about raising taxes or lowering taxes. It's about unlocking private capital. There's trillions of dollars of money sitting in money market funds, sitting in bank accounts. If we get more and more people to move that money from a savings account to an investment account, we'll be fine.
Yeah, so it's not I would say it's not a crisis, but it's very important we deal with this issue. It's a global issue. You go around the world, deficits are too high, governments are spending money, a lot of that money is being spent for consumption, not for future growth. And I would just add, what really works is good policy. We need growth policies, deregulation is free, you travel around the world, and I was just in Argentina, and you look at the policies, what they've done in Saudi Arabia, with the markets, with PIF, with education, with schools. Good policy is free, and bad policy is devastating. So we should all focus on is education, healthcare, infrastructure, proper taxation, foreign investment, and it should be used to help all the citizens of a country. And we don't focus enough on that because bad policy sinks country after country after country.
So people who want to invest in the United States, should they be worried that the dollar is going down against, let's say, the European currency for the last about 11% or so since January? Or is that something that American people who invest in the United States should not be worried about? The dollar has declined in value. Is that a concern of any of you that the dollar has gone down in value, or not
It's
really?
it's a short window, David, and there's been dollar supremacy for a long time. You've given a little bit back, but at the end of the day, it goes back to this growth point. Where's the technology innovation and where's the growth? Technology innovation is central to growth. The United States has a very strong hand in that. Where's capital formation, the best capital markets in the world? The United States has the best hand in that. So while in the short term, there are reasons that some of the dollar dominance has moved back, when you talk to capital allocators broadly, and Larry made this point before, the vast majority of capital allocation, 50%, is going to come to dollars and dollar-based assets, given the economic position we have.
So a final question for anybody. Should I be buying cryptocurrencies or should I avoid it? Anybody think this is a great investment opportunity, or
If you believe that countries are going to continue to debase their currency, if you believe that there's going to be global rise of insecurity, owning crypto assets or gold are assets of fear. You own these assets because you're frightened of the debasement of your assets. You're worried about your financial security. You're worried about your physical security, and between crypto assets and gold, they believe there's a strong belief that is a good hedge against optimism.
Okay. Jamie, you were a little skeptical of crypto at one point. You're still skeptical.
I've gotten away with no damage so far. Crypto is real. If you mean blockchain, stable coins, you have a JP Morgan deposit coin, you can move stuff, smart contracts are real, all that stuff is real. It will be used by all of us to facilitate better transactions and customer service.
If anybody wants a tour of your new building, what's the best way to get it? Call you directly?
Call me directly, yeah.
Right. You're easy to get a hold of, right?
Yeah, you'll get in, David.
Okay. Thank you all very much. Appreciate it.
Thank you.
Thank you.
Thank you, David.
Thank you, guys.